Alright guys, real quickly before we get into the video, today's video I made about 2 months ago, but it just has so much sauce, so much information that I know you guys can use, so I had to make sure I upload it. I'm trying to make sure this is a yap-free episode, so let's get straight into the video. How's everybody doing? In today's video, I'm going to be covering my ICT One Setup for Life. Don't panic, I know there's going to be a lot on screen, but every ICT setup requires a run on liquidity, and I'm going to show you how to spot when, where, and why the best run on liquidities happen and how to catch the reversal or continuation from that said run on liquidity. Like I said, do not panic. Everything will become second nature. All you will need is chart knowledge and maybe a line or two. You will naturally know where OTE is. You will see your MMXM and power of 3, and you will know when, where, and why to trust key-based time highs or lows. On screen, I'm going to quickly cover a few key tips you need to know while I cover my 3 examples that I've taken and posted in the Discord. So first things first, we're going to need to know the difference between a reversal turtle soup and a continuation turtle soup. We're also going to need to know that the high time frame has power over the low time frame, and the low time frame will mimic the high time frame. We will always be looking for a power of 3 manipulation cycle after our second leg of accumulation into a key level. Our smart money reversal should always look like a power of 3 with a key time-based high, open, lower, close into a manipulation with display. That is non-disputable. I always have to have displacement in my turtle soup or I'm going to think it's fake. SMTs at these key levels will also allow us not to take out said high or low, and I will show you examples for that as well. A lot of people also struggle with latching on and trusting and drawing liquidity, so on screen we also have a draw on liquidity checklist, something for you to mark off, and if everything is in your favor, it has to be an A+ setup. We are going to be covering 3 trades that I've taken since this Sunday open. If we take a look on the daily chart, we can see we swept this internal low and closed back inside of the range here. So if we look on the lower time frame, such as the 4-hour, we can also see the 4-hour candle do the same type of thing. We accumulate, manipulate lower, and close back inside of the range here. At this point, it is not confirmed, but we do have a good likelihood with our candle closures and new candle opens that this will form a rejection block and come back internal inside of the NWOG. Coming to a low time frame, we can also see that we reaccumulated, did not deliver a turtle soup anywhere inside of our PD arrays or inside of this displacement lower. We closed on Friday and then opened Sunday with displacement to our draw on liquidity with that low. We can also see that we have displacement inside of our manipulation, and our manipulation comes at 9:30. Our key here is the 15 minutes and 30-minute candle closures and opens, and we can see how we react inside of this wick here, inside of that 4-hour wick, and inside of the hourly wick. Then we come down to the 15-minute, and that candle liquidates that low, closes back inside the range. And this one is harder to catch because a lot of you guys either choose the rejection block or choose an order block, and it's hard to catch this wick, because you want the big down closure candle to wick, catch that wick, and then move higher. But it's not always going to look like that. You can't say, oh, it's going to look one way or the other. But as you see on the low time frame here, inside of that 15-minute candle, we have the same type of thing happening here. We accumulate, manipulate with displacement into our 9:30 open. New candles open and closings. We sweep out and liquidate and close back inside of the range and form our order block here. You can enter inside of this wick, but I'm just going to show the best, the easiest entry to learn, and that's on that candle closure, on that last down close candle, is closing above it and then having that CSID or low time frame breaker. I say low time frame breaker because if we go on the 1 minute here, we can see that we delivered that lower low into a higher high, right? So we accumulated, manipulated, distributed, and displaced on the low time frame. We can see we're leaving FEGs coming, filling them, displacing with more FEGs above our old high, coming into that previous high and using it to support price higher. Those previous down close candles act as roadblocks and they push price higher, mitigating this area here, pushing us lower into our internal, right? We saw that we left and closed on the 5-minute, 15-minute. We now have an internal order block on the 5-minute and the 15-minute as well. So from there, we deliver higher. We form another CSID, and now we have equal highs. We have even that trend line resistance liquidity. We have the equal highs here, and we also have the time-based highs that are not souped out like I told you guys earlier. This low is so important to me because this starts our turtle soup sequence. When we displace past this high, we can see the MMXM that's formed and know that we're able to enter anywhere inside of this order flow that's moving higher to these equal highs and then even into the NWOG. Past that, especially on a Monday, you can kind of let, we see this is into the PM session. If you're really not entered by then, you can expect, now we have equal lows here, low resistance liquidity. You can expect, us to get pushed, reaccumulate, manipulate lower to then push higher. We move forward a little bit, and then this is where I ended up taking my trade. Is like we said, we reaccumulated, we moved lower into that internal FEG, and I did not take this as a turtle soup because it's not at my 6 p.m., 7 p.m. Asia key time. And it is inside of that 4-hour power of 3. And if we look at the 30-minute, we can see we have a obvious order block, lower low, higher high. Even from here, right, lower low, higher high, breaker block. And if we look from this low that we called the order block to this high, we can see that we're coming into an OTE, failing to close and moving higher. So we can still trade it even though it's not at a key time. But for me personally, I'm going to go break even a lot quicker and, be fine with, maybe missing out on this. So anywhere, like I said, from the turtle soup you can enter. We can see that we form that lower low into the higher high there, and then react off our order block, our previous down close candles. Once we break this high here, we see our breaker entry. And honestly, you can either enter, like this at your low, or you can also enter at this internal low, knowing that you can look at the IFEGs, but I don't, right? I look at the order block we've created, displace past the higher high, and have the likelihood for a breakaway gap here, but most importantly, know that the two lows are protected. In most senses, especially down to an OTE here, if we fib the high to the low, it's way past OTE, down past OTE, and we're already delivering from OTE down here, so we should deliver and displace quickly on the lower time frame here, right? If you guys remember, we were 30-minute from this low to this high in an OTE, failing to close, so we should displace and move quickly. We can see that's exactly what we end up doing. A little bit of chop, a little bit of manipulation, and if we even move in low time frame here, coming back into the order block, right? We barely soup out. Like I told you guys, we had that internal into the breakaway gap, and you can easily find an entry back into the high, and eventually we run and take out this low resistance. And if you're not worried about it, that's why we put the stop before into the bodies, because right, wicks usually act as gaps, kind of the final leg of defense before we end up running that draw on liquidity. Easiest, safest target, even that's a good target, but this is like an easy 2R or whatever, right? And then we kind of showed that low time frame entry. If you wanted to enter here, right, like I said, I wouldn't like enter really heavy there, but I'll show you guys a better example of a more tighter RR trade. This one just looked good to me. At the time, wasn't sure, so just took a little bit of a bigger RR, a bigger stop loss, ensuring I wouldn't get stopped out. And we'll go on to another example here now, where we saw some move internal from the order block, right? We had our fib from this range, and then we caught the OT of this. So we'll move on to that next example now. If it isn't obvious already, I really want you guys to open your eyes up to fractal price action, the 1 4-hour power of 3s, as well as the 30 minutes. It doesn't matter that I'm a turtle soup trader. I can catch the continuation following a turtle soup to obvious draws on liquidities. This is the easiest way to trade if you want to take the turtle soup because it's more high probability. We're going to be looking at this 2 p.m. example where a member in the Discord actually caught this. I did not catch this. I'm not going to say I caught it, and I did not. I was not on the chart at the time. He sent this to me. He was like, hey, is this valid? Didn't see it, and he ended up taking it anyway. And that's why I love when members stay confident in their own trades. This 2 p.m. is perfect. It's just 2 p.m. I wasn't on the chart. I tell you guys, Asia, London, or New York AM, and we see what's key about this is the 4-hour. Deriving from our original turtle soup here, we can see how that 4-hour plays out inside of this 2 p.m. continuing from that AM, right? Turtle soup, continuation turtle soup. We have our reversal turtle soup into your continuation turtle soup at a key time based, at a key time. As we see, what happens inside that 2 p.m. The close, new hourly open into 3, that wick is really reactive, we continue higher. Lower time frame, how would you catch that? You see in the 30 minutes from the 230 to the 2 to 230 open, we zoom lower time frame and we can see that we're accumulating, manipulating, and then following with displacement, only staying here for roughly about 20-25 minutes. We can see that we break down lower, we soup out our final low, and where are we souping into? Why do I call it a turtle soup? If we look at the 30-minute, we are souping these lows here into the internal liquidity into an OTE. We see our original continuation turtle soup here, and now we see from that high to low and an OTE, and then order inside of the 30-minute order block, inside of the 15-minute BPR, right, breaker block, lower low, higher high, we deliver beautifully back higher. What I did not do is catch here. What I caught was the continuation. That's why fractal price is so important. Intraday trading price action can be so important, and is why as being confident in your draw on liquidity is just as important. What do we see on this 30-minute? We have a lower low, higher high, closed at 330 above into a reaccumulation into 430, sweeps our low into the FEG and delivers higher, right? We can see how we always talk about a 3-candle model. We soup out that low, close back inside the range, right? In the range of that previous candle, and use that wick as a reactive wick, as a gap. We move higher, close above. We see the wicks and the candle openings doing amazing. So all we have to do is now catch the continuation. As you guys can see, it's right into 6. So 6 opens, we close above, and I didn't even need the close above for this one, right? We open, we move lower, open low into our high, and then should be close above into our draw on liquidity, right? We didn't need to manipulate lower. We were continuing. We had technically inversed, right? Closed above. Now we have 2 long wicks, and wicks should get filled to and through. I know we can see this one not get filled to and through, but we're also running right into an SMT on the left above some key highs into a high time frame PD array. So, we can see us move internal from here and not need, to long anymore from there. And then, that comes into an OT here, and then, price action that I didn't trade because we're inside of our previous range that we've already traded. So if you see, why didn't you trade any of this? Can you explain that? Right, we're inside of our previous range that we've already traded, and it's more likely, for shorts right here to play out into our low resistance, and then watch out for an SMT, watch out for our high time frames, and then also knowing that this low could continue and to act as protected, and then we see even there accumulate, manipulate, distribute. I didn't trade Wednesday. I'm pretty sure I ended up trading the continuation or something, but nothing of real. Oh no, actually, yeah, Wednesday was the Trump thing. Yeah, so I didn't even trade that Wednesday. Yeah, because I had to trade the night before right here. And that's in the Wednesday AMs, or Wednesday trading day session. So NFP Friday I didn't really trade, and I didn't expect this either with Trump speaking. I don't think anybody did, but anyway, I'm gonna end that one off here. I hope you guys enjoyed. Hope you guys liked the examples. And I hope you guys can understand how I trade this one setup for life. Even though I may not always enter on a turtle soup, I can fractalize price, trade intraday order flow, intraday price action, and find my entry based off a key high probability turtle soup. Any questions, put them in the comments. My spit looks weird. What the world? Gonna get some water. But yeah, anyway, put your questions in the comments. Please like the video if you guys enjoyed. Be sure to check out the Discord in the comments, and I'll see you guys in the next one. Peace.